Hi Shiv, how's the day been today?
No, it's great, Samir. How about you?
Very good, thank you. Thanks for asking. I've been hearing a lot about this buzzword democratizing real estate or fractionalizing real estate. What's your view around that?
So, Samir, fractionalizing real estate is a new age concept that's revolutionizing the way people invest in real estate and specifically in commercial real estate. So, let me just take you through it and how exactly it works. So you think about your grade A commercial buildings across the top 6 cities in India. So in Mumbai, it might be a BKC, a Andheri East, in Delhi, a Gurgaon, in Bangalore, an ORR. So you have these large office complexes where you have grade A tenants. Your tenants are the likes of Deloitte, Accenture, ICICI Bank, and they sit out of these premises and they rent office space. Now, traditionally, these office spaces were owned either by large institutional investors like Brookfield and Blackstone, or floor by floor, office by ultra HNI investors. Because even to own one floor, you need to put 40, 50, 100 crore, and Blackstone and Brookfield are buying full buildings for 1,000, 2,000 crore. So now people were, so one might ask, why own this building? What's the purpose? And obviously, it's because of returns or your risk return profile of investing in such an asset class. So you get rentals of 8 to 9% of a year. Along with appreciation, you can make 15% IRR. And these are backed by long-term contracts with grade A tenants. And because it's a hard asset, your downside risk is limited. So great, ultra HNIs, institutions can own this asset class. But what about the retail investor? So what fractional ownership is doing is with a much smaller ticket size, you can own part of this asset class. And it's completely tech-enabled.
So effectively, what you've done is you've created an alternative asset class for the common man.
Absolutely. Currently our minimum ticket size is 25 lakh, and the vision obviously is at some point to keep reducing that ticket size so more and more people can own this asset class. And if you look at globally, intergenerational wealth, when people are really want to conserve and preserve wealth and at the same time make good returns, it's been made through real estate. And so the idea is to open it up to all individuals.
So would the closest comparison of this asset class be to a fixed income instrument where you get effectively a fixed yield?
That's one part of it, right? You're getting fixed yield, fixed income, and in this case, it's from grade A tenants, right? Like I mentioned, Deloitte, Accenture, ICICI Bank. But then you're also getting the upside of owning real estate, owning commercial real estate.
So I guess it's a hybrid between equity and fixed income, effectively.
Yeah, absolutely, right? Because, you're an expert in this, right? But in debt or say in FDs, you'd get 6.5%, but with no upside. And on the flip side, in equity, sure, you might make 20, 25% IRR, but equity can also go to zero. So again, here it's a hybrid. You're getting the benefit of debt, and in fact higher than debt, right? You're getting 7, 8, 9, 10% on a monthly basis, but then you're also getting the upside. So you might make a 15% IRR, a 16% IRR, and it's not going to go to zero because at the end of the day, you're owning a hard asset, a hard property.
And how are foreigners looking at India? Obviously, there's a lot of foreign companies coming into India. So what's your view around the commercial real estate market here?
Yeah, so, Samir, if you look at the commercial real estate market, it's really grown in the last 10, 12 years. And that's because, that started 20 years ago with the outsourcing into India boom. Right? A lot of these IT services companies wanted to hire low-cost talent in India to service their clients in the United States, and that's really caused a boom in commercial real estate. In fact, you look at the markets of Bangalore or Pune, they're dominated by this. Then obviously there's the banking sector that requires this grade A office space. There's technology, now there's co-working players. So really started off with the IT services boom, and now it's gone into all these industries, and all these clients require grade A office premises. To talk about the kind of office space that India has, the total amount of grade A office space in India is 700 million square feet. Compared to Western markets, developed markets, is extremely low. So there's going to be a huge boom in commercial real estate demand, even given how the Indian economy is placed today. And Samir, if you can talk about overall the Indian economy and where commercial real estate fits in there, how India is expected to do in the next couple of years, and where commercial real estate fits in there.
No, absolutely. Firstly, I think India definitely, despite globally markets talking about a recession in the US or in some of the European countries, I do think India is well poised. I don't think India is going to go through recession at all. I think the central bank has been extremely active around firstly controlling inflation, and recently they paused, which basically is telling everyone that probably the hiking cycle might actually be over.
Right.
So once you see the hiking cycle pausing or getting over, you definitely see real assets going up, and commercial definitely being one of them. I also feel that given the housing in India, where people don't live in very large apartments, people like to work in offices.
Absolutely.
And this is especially true of Mumbai. And that's why after COVID, pretty much everyone's come back.
You were just talking about the macro factors. What are your thoughts on the whole consumption story of India and where that fits in terms of demand in commercial real estate?
So the consumption is definitely going up, right? I mean, it's India. India is one of the emerging markets which probably will have the highest growth, given that China has been slowing down.
Right.
So with the consumption market going, there is effectively a lot of demand coming from the youngsters, because
Yes.
we have a very young population.
Absolutely.
And that obviously, and the younger population is now coming into the workforce. A lot of them is coming into the workforce, which effectively means the demand for commercial real estate continues to go up. So that's one.
Yeah.
Plus, you're seeing a lot of foreigners coming in, right? The Amazons of the world, they definitely want to grow. The Walmarts of they want to grow because this is a market which they love.
Right.
Apple is actually shifting a lot of their production facilities from China into India.
Yeah.
So these things are actually going to help the commercial real estate
In
market
fact,
a lot.
funny you mentioned Apple. I think Apple's opening their first store in Mumbai, right? So
Absolutely.
shows the commercial story in retail as well. No,
Absolutely. I guess I had one question for you, and this is more, I guess, around the fractional.
Yes, right.
What's your view on liquidity of these instruments?
Yeah, so Samir, I'll talk about liquidity, and which you're obviously aware of with us as hBits as a platform. So let me talk about overall the difference between REIT and fractional, and then I'll touch upon your liquidity point, because yes, anyone who says REIT, they said it's liquid, you can exit tomorrow.
Yeah.
But what about fractional? First, let me talk about where fractional stands versus REITs, right? So REIT, basically it's a mutual fund. If you look at it, it's a basket of assets, and that's really selected by the fund manager, or in this case, the sponsor. So there are 3 REITs in India: Embassy, K. Raheja, and Brookfield. So ultimately, it's their assets that are coming into this portfolio. Here, it's more like a stock. You can pick and choose which asset you're investing in. If we have investors who are from Mumbai, but they want to invest in Andheri, but they might not want to invest in the eastern suburbs.
Right.
So you can really pick and choose and curate your own portfolio the
Right.
same way you can in a stock. And REIT is a mutual fund. Other is obviously the volatility, right? Your stock market goes up, your REIT goes up, your stock market goes down, your REIT goes down. Here, your price of your asset is just dependent on that asset, not to do with how the stock market is moving up and down. So you're really getting the benefits of diversification away from the stock market.
Right.
To come to the liquidity standpoint, right? REIT, yes, you can list tomorrow and you'll exit. In fractional ownership, there are 3 ways in which an investor can exit. One, you can list your share on the platform. We have 50,000 registered users, 500 partners that we work with. So you'll be able to exit your share in a month or so. Other is in 4 to 6 years, we look to exit the full asset at the appreciated value, and you get an exit at that point in time. And there's a universe of ultra HNIs, funds, etc., who will buy these assets of 40, 50, 100 crore. And finally, which we are planning, Samir, is in 2 years, we want to give liquidity of our own balance sheet to investors whenever they want. So hopefully we'll have that in a couple of years. So that makes it also, it solves that liquidity problem that people have faced in commercial real estate.
No, absolutely. In fact, the commercial real estate market in the US has had a major problem for 2 reasons. One is interest rates have gone up substantially, and a lot of the REITs had actually taken debt on their books.
Right.
And because of that, that's become very difficult, because refinancing is becoming more and more difficult. In our case, I guess, we are a micro REIT and we don't really take any debt.
Exactly.
One interesting thing you pointed out, and when you compare it to the equity markets, what I like about our hybrid product is it does not have the high volatility which equity markets have.
Exactly.
And the returns are pretty much as much.
It's stable.
Are very, very stable.
And the returns, are not as much because you get that appreciation.
If you get the IRR of 15, 16%, then your returns are in fact higher than a lot of the equity markets.
So Samir, I mean, anyone would ask and would like to discuss So how do you get that appreciation in commercial real estate? We spoke at a macro level,
Right.
how commercial real estate came into the market, where it is today. But really, what drives that commercial real estate? I think if you look at the real occupiers of commercial real estate in India, majority of them, I think 60% of them, will be global headquartered companies. They wouldn't be Indian companies, they'd be MNCs. And how do they make their decisions to expand in India or into another city? It's on a dollar per square feet basis. They look at what is my real estate costing me on a dollar per square feet basis. Where was the dollar 10 years ago? 40 rupees. Where is the dollar today? 80 rupees. For a commercial real estate occupier, a global occupier who's occupying in India, their cost for the last 10 years has stayed the same.
Right.
Or rather it's gotten cheaper, but rents have also risen.
Yes.
So as rents rise, but the dollar depreciates, for them the price stays the same. But for an Indian who's investing in commercial real estate, his rent is rising, right? And dollar anyways, which you could touch on a little bit, generally the rupee depreciates 4 to 5% on the dollar.
Absolutely.
Yeah.
And then I guess, Indians buy a lot of residential.
Yeah.
I mean, me included, I'll be very honest. What's your advice for people who are just going into residential, given the fact that commercial returns are much higher?
Yeah, so residential, it's a very, very different market than commercial real estate, right? So as an investment, you only get 2 to 3% in residential, right? If you're buying an apartment as an investment, you rent it out to a family. So sure, it might be a credit-worthy family, but versus a Deloitte as your tenant and ICICI Bank as your tenant, there's obviously a big difference. There's also the fact that you as an investor, if you're investing in residential, have the headache of looking after that property. There's some water leakage, your tenant calls you have to fix it, the AC broke down, you have to fix it. It's a nightmare to manage residential real estate, ensuring your property tax is paid on time. So
Right.
in Fractional, there are professional people like us doing that. Makes it so much more convenient and your returns are higher. The other thing is also, residential commercial is just the limitation of supply in commercial real estate,
Right.
which means there'll always be a good appreciation in commercial real estate.
Right.
Right? Because in residential, anyone can become a developer. Reason being is, when you want to develop residential, you sell apartments first, you get cash, and then you start building.
Right.
Right?
That's right.
So you don't need a large balance sheet, you don't need that much funds. You get customers, they'll pay you, and then you start building. While in commercial real estate, as a developer, your real revenue only starts coming in after a period of 5 years, right? You have to build the whole property, get OC, then a tenant comes in, then you rent it out, and then you finally sell it to a
Right.
fund or a fractional player or an ultra HNI. So really you need a very strong balance sheet, which is why you notice commercial properties are always higher quality than residential, and also there'll always be, because of this inherent limitation, there'll always be lesser supply of commercial real estate, but it'll be better. So that's again why it makes it a much better investment than residential real estate.
So if you had one advice for a new investor, what would that be?
No, so advice for a new investor is obviously you have to look at your portfolio, you have to diversify. But fractional ownership and commercial real estate is something that you cannot miss out in today's day and age.
No, absolutely. And as you mentioned, I think as an alternative investment class, obviously the returns are extremely, extremely good.
So Samir, if you could just touch a little bit upon, how you spoke a little bit earlier about how the interest rate environment and how that's going to impact the price of commercial real estate, what's the right time to acquire, what one should look at, and how that global macro factor is playing into the commercial real estate environment today.
No, sure. That's a great question, Shiv. So in the US, people are already talking about Fed pausing because obviously there are recessionary fears.
Right.
RBI has already paused, and a lot of people are saying there will not be any hikes. I personally think in the US, maybe you get one more hike, but that's about it.
Right.
So we're already seeing cycle where I think rates have pretty much peaked. So I actually think today is the best time to get into real estate. Because obviously commercial real estate, interest rates make a big, big difference.
Obviously, it's a great time to invest, which is why, in fact, last year the interest rates were rising. We as a platform did not invest. That wasn't a good time to invest. But just for for some people who are not that familiar, with what a cap rate is. Why is it a good time when interest rates are flat or falling? How does that impact the price of commercial real estate?
Sure. So when interest rates are rising, obviously, bank deposit rates also rise. So fixed deposit rates rise. If you compare to US Treasuries, yields are going up. In the US, government bond yields are going up. So there are always alternative assets where you can invest.
Right.
So a lot of people may not want to invest in commercial real estate if rates are actually lower than fixed deposits.
Right.
But today, what we see in India, the rates are higher than fixed deposits. It's actually backed by actual real assets. That's second. And as rates come down, the value of the commercial properties will go up because the cap rates or the rental yields will start coming down over time.
So like a bond.
Absolutely,
Similar like a bond.
absolutely.
Yes.
Only it's a bond which is backed by
Real
a
estate.
real asset. And that becomes, I think, extremely important.
And also on the ground, what you're seeing, Samir, is, what we saw last year, as the interest rates were rising, developers, their interest burden was increasing. So that's why there are a lot of good assets coming onto the market right now. In fact, which is why we expect this year we'll be able to do 1,000 crore in the next 12 months.
No, absolutely. And I totally agree with you. This is the best time to do it. And, we will obviously be talking to our investors to make sure that they invest in the grade A properties we bring to the market. But thank you, Shiv. That was an interesting, good discussion. Thank you so much.
Thanks.
Thank you.